How's it going, guys? Thanks for tuning in. I'll be starting this price action video with a long scalp trade, which I should note did not perform as expected. In fact, it only reached half of its target. So let's start by going over this section of this 1 minute time frame over here. As this is where actually things start to get interesting. We can see that there is a lot of activity going on down here with prices first bouncing off of the 39.73 level after this liquidity grab. Next we see a bullish order block form followed by a break in market structure. This eventually leads to the price moving upwards to create these equal highs right over here. However, you'll notice that the topmost high marks the top of our range as a result of this resistance area right over here. Now, given these technical details, we can start to look for a trading approach that can take advantage of these price movements with the right confirmations that will eventually lead us toward a more specific approach to this trade. So after this move higher, we see a nice reversal, which is then followed by a brief pullback, and this is all before another push to the downside. So what does this mean for us? It looks like the market is still undecided at this point, and that we could see some more volatility in the short term, which is why it's important, I think, to stay focused and remember that these movements are all part of the bigger picture. At the same time, we have to keep an eye on the key levels of our range and try not to get too caught up in the small movements. And as you can see from the chart, after evaluating the price trend, we can see price reversing off of the 39.74 level, which is a level that corresponds with the origin of the bullish order block, which, if you recall, I mentioned at the beginning of this video. At the same time, we also have this impulsive or momentum move out of the base here, penetrating the sell side. This is a common structural element that confirms that our base is a demand zone, which often precedes both a downtrend hold and repricing period. The demand zone is a key element to watch for when trading the markets, as it can give us a good indication of where the market is heading. It is also important to note that demand zones often coincide with support levels. So now that we have identified this area as our point of interest, we need obviously to keep an eye on it and look for opportunities to enter long once the price gets into this imbalance zone. If it doesn't, then there is no trade.
Order filled.
The price was only slightly higher here than my target, so I didn't get to sell it. I readjusted my profit target to the neckline of this head and shoulders formation.
Target filled.
Alright, with this trade out of the way, let's now move on to the next one. So this was a momentum price action trade based on this week's Fed's beige book findings, suggesting that the US economy had been steadily growing throughout the fall with a marginal decline in inflation rates. As you can see in this 1 minute chart, after creating a base right above previous day's low via this double bottom formation, which, as you know, is a pattern that occurs at the end of a downtrend, the market reversed and started heading steadily higher, one consolidation phase at the time, and into this resistance area marked by this yellow dotted horizontal line. As soon as the Fed's news hit the wires, the market reacted with a 35-point spike. It then continued to surge past our range and the previous day's high, following the creation of this order block at the 39.74 level. Obviously, when it comes to momentum trades, which are placed by traders who are trying to quote-unquote ride the wave and take advantage of the security's upward momentum, it's tough to predict where prices will go. However, based on the exhaustion of this 50-point expansion, which is clearly marked by this liquidity grab, and the fact that this sharp momentum move overtakes the sell side of the range, which leads to the creation of a new imbalance buying pressure, it's more likely that we will see a price action move to the downside and a possible retest of this order block area. While nothing is ever certain in the world of trading, this seems the most likely scenario, which is why I placed my long scalp order inside this imbalance zone here, where I thought the market was most likely to find its temporary equilibrium before a move higher.
Order filled.
And as you can see from the chart, once I was filled, the market made a reversal movement, setting a bullish trend where I could scalp a few points. It's worth noting that the problem with momentum trades is that, and believe me here, I'm not happy that the market catapulted like 100 points higher from where I sold. But the problem with momentum trades is that since they are often driven by speculation and herd behavior, they can reverse course very quickly. So there is always the risk that the trader will get whipsawed and end up losing money. Don't get me wrong though, overall momentum trading can be a profitable strategy if used correctly. But it also comes with pump and dump risks that should be considered before taking such trades. And again, and as I've said many times before in this channel's videos, I never chase and rarely will play news. But in this particular case, my entry was strictly based on range exhaustion and order block based recovery wave, which, as you can see from the chart, quickly lifted the price back above previous day's high. Alright guys, so that should do it for today. Again, thanks for watching, and as always, if you liked the video, please like and subscribe to the channel. I would really appreciate it. Thanks again, and hope to see you in the next one.